Okay, so I am here today to talk about insurance, and we are joined with Meg Herman from Goosehead Insurance, who has been selling insurance in this local area for a long, long time. And, you know, we look back at 2023, and I always think, well, there's two eyes that people were watching last year: interest rates and insurance, right? And they both did some things that not everybody enjoyed last year. They both kind of went up. So we want to talk about what happened last year. Like, why was last year such a jarring year for everybody with their insurance premiums? And we want to understand that a little bit, and then obviously talk a little bit about, all right, now we're in 2024, like, well, what are we looking at in the future? So when we talked earlier, like halfway through the year, and you were talking to our agency about like what's going on in insurance, you used a term that honestly I really hadn't paid much attention to before, which is a hard insurance market. So what is that? And is there a soft insurance market too? Like, where are we in all that? Is that kind of what's caused these rates to go up?
Yep. Well, Chip, thank you for having me here.
Oh yeah, I love having you.
I'm super glad. I'm super appreciative. We love your team and
thanks.
all that you do. And it is a pleasure to support your team. So insurance, a hard market is exactly the terminology that we use in the industry to describe what is a normal industry cycle. In the last 50 years, we've seen 5 distinct hard markets.
Okay.
So a hard market in insurance looks a lot like a seller's market in real estate.
Sure. Tight inventory among steady or growing demand, right?
Exactly, right. So what happens is the market grows hard when insurance companies are losing profitability.
Okay.
We're losing money. They don't want to grow. They want to sort of coil in and lick their wounds. Yeah. So we'll see a consolidated group of insurance companies wanting to write insurance or able to write insurance at certain times. So we've got a departure of carriers from those that will insure us. Yep. In addition to really tight guidelines on writing the insurance, underwriting rigor, as I call it.
Yes, rigor, which is also a pain point. We experienced that on our side of things last year. So you're talking about fewer companies that are willing to write, and I think that's the thing about, like, we kind of punned about this is like the necessary evil of property ownership, right? Is you got to have insurance. And I'm no insurance hater. In fact, I've been through claims. When Hurricane Matthew came through, we had tree damage to our house. That was a wind claim. We had rising water, so we had a flood claim. I was super glad we had it, okay? And so I understand that, and I understand that it's a necessary evil, but it gets tough when there's fewer insurance companies writing. And for me, everybody's paying a lot of premiums, right? I think that's if it was cheap, it's like, oh, I'll do insurance all day long. It's no big deal. But it's not cheap. And so people pay attention to it, and sometimes you resent it. And I guess the challenge that I see is that when these companies now start having more strict guidelines, they're looking at things like maybe your roof is too old. Oh, you got polybutylene plumbing. Or you got an old electrical system. And so now you start getting situations where maybe some of these insurance companies, not only are they limited on whether they're willing to write in an area, but now they might not even take you on. So we've heard a lot of people that can't get coverage, or they had coverage before, and then all of a sudden they had their carrier completely remove and say, we're not even renewing.
Right, we're not renewing, and then it's difficult to find a replacement company because of some of those problems that you've talked about. So you're spot on, and it's been a really challenging year in our office, just making sure we're having.
It hasn't been a fun year.
Having the conversations. Well, I've gotten to spend a lot of time with my clients, which is great, but getting them through this process, this underwriting process. So we've got this, just like a seller's market in real estate, we've got this long line of people who need contracts, right? And we have companies that just have a few contracts, right? So now if there's 2 houses next to each other, one's got a fence around the pool and one does not have a fence around the pool, and you get to make a choice. I'm taking the house if I'm an underwriter.
Sure, right.
I want the fenced pool, right? So even though in our guarded communities we don't have to have fences, or sometimes we have a difficult time getting fences, it's a situation where that guideline gets twisted. It doesn't serve us, right? It's harder.
Yeah, sure. And so that insurance company might say, well, if I'm going to choose and we've got a limited amount of risk we're willing to take, I'm taking the one with the fence, right?
Like all things being equal.
And that's their right. That's their opportunity. And then that homeowner that doesn't have the fence, as this example, needs to start scrounging around for maybe some other companies that are willing to do it. Maybe they charge more, maybe the coverage isn't as good, which kind of begs the question of, I think people want to know, well, what can I do to make my house more insurable, Or what do I need to do to kind of keep my premiums as low as they can? I mean, this becomes an affordability factor for a lot of people because the premiums really have jumped up so much. So what could people be thinking about or doing to try to make an impact?
Right. I think that's a great question, and the insurability of your home is really what we're talking about, in that sometimes you can't put a fence in.
Right.
Sometimes you just can't get a fence. But there are things that you can do as a homeowner to sort of, can I take on some of the risk management things that maybe my roof is with just about 20 years old?
Right.
You should be thinking about a new roof or getting a new roof, and that is a big deal.
Which in my world is a good investment on the resale of your property, right? Because it makes the property not only from an insurance perspective more resaleable, but a buyer sees that and says, gosh, a brand new roof or a 2-year-old roof, like I don't have to worry about that for a long, long time. That's a good, strong selling factor.
And the insurance company, number one thing that's keeping out the wind, hail, and the hurricane is the roof.
Is the roof.
So that is the biggest thing you can do for the insurability of your home. That's the big one, is just work on the roof.
Yep.
But updates to like plumbing, electrical, those types of things. Plumbing that's over 30 years old hasn't been updated at all. Carriers are saying, hey, we're going to limit the water loss on that. So things to be thinking about. And then you can be more proactive in risk management. You've probably heard of units that will actually shut the water off.
Yes.
Monitor the flow of water through your plumbing, and then if there's some kind of an inconsistency, it'll shut it off.
Right.
Those are becoming a really hot thing for insurance companies, as you can imagine.
So you got these devices that you're seeing a much bigger impact. So obviously smoke detectors, they're required by code. Then you got carbon monoxide protectors that are always a good idea. Now you've got water flow protectors, or I guess really that's the best term, protector or sensor. And then we were actually talking about recently about like a surge sensor in your electrical system.
A ting.
Okay, so you've got these things that people can, and you can advise, somebody calls on you, you can advise what this product list looks like. But those are easier ways, certainly a lot less expensive than a brand new roof, that actually do have an impact. A security system, cameras, and that sort of thing are all part of being on the table now to help kind of reduce premiums.
And so, and the best claim, as you know, is no claim.
Correct.
You've been through a claim. I mean, even though the insurance was there, great. But it really disrupted your life. Right? So we don't want to have a claim. But if you can avoid a water loss, and the devices that are out there now that come with a guarantee, plumber installs them, shuts the water off, those are huge for your own peace of mind, but also insurance company provides credits. And I see that happening more, even when we come out of this hard cycle, which we can talk about. I see insurance companies really looking more towards that client that's got the risk management in place, right? They're going to be they're willing to give a credit for the device that shuts off the water. They're willing to give a credit for the ting unit that monitors the electricity and wards off a fire.
And those things all basically add up. But let's go back to this thing about the hard insurance market, right? Like, so where's this going? We're here at the start of 2024. I'm going to put you on the spot. So are we expecting that again, like a doubling of that impact, or do you think there's a chance that things are leveling out, or is there some point in the future where the market gets soft again and the cost of insurance could go down? Like, what do you, as you prognosticate, like what are you seeing and what could actually happen?
I did ask for a crystal ball for Christmas, but I didn't get one.
We're not going to pull it out here. So.
What's going to happen? But this is an interesting time for us to be having this conversation. So the hard market is essentially the insurance, all insurance companies have reinsurance, right?
Sure.
So the companies that are insuring our homes don't take all of the risk, right? They go to an insurance company, and then they've got that stopgap.
Kind of staying behind them, right?
So we call those the reinsurance companies, right? Reinsurance companies is this big machine, right? There's all these massive reinsurance companies out there, and significantly their rates come out January 1.
Okay.
So January 1, 2024. So we already have sort of a view of what's happening. Last year at this time, the January 2023 reinsurance rates came out, and it was the worst thing that's happened in the insurance industry in 50 years.
Right.
It was coming. We all saw it. It was like, holy moly, this is a generational kind of change.
Yes.
So
we all felt it.
It was shocking and horrifying. So those, and you can see how the carriers leave, right? So they get these reinsurance rates. If you can't get if you're an admitted company and you can't get a rate increase from the state of South Carolina to cover the cost of the reinsurance,
they're out.
You got to leave. I'm done. We're upside down.
Sure.
So all those companies, many of those companies left. We felt that. And then what we have left are these excess and surplus lines companies who solve big problems for us, but they can change their rate without having the state of South Carolina, approve that rate increase.
Sure.
So we saw 40% rate increases, 50, 60, 70, high value homes, secondary homes, really hard hit.
Yeah.
So here we are.
Yes.
And we're looking
Let's talk about 24.
Now we're getting into 2024, and what we're seeing in the markets that haven't had the catastrophic risk, we're seeing flat reinsurance renewals.
Oh.
Praise the Lord.
All right, so we're talking that you're thinking that people might expect that wouldn't happen again. Like there's not going to be that big jump.
Right. There were some, I'm not going to say the whole reinsurance market was totally flat, but there were still some increases where there were catastrophic losses. This is a worldwide marketplace, right?
Yeah.
There's fires, over in Hawaii.
Well, I want to make that point. Like, this isn't just us, right? It's not just the Hilton Head, Bluffton, low country market. Like, high risk is seemingly, all you got to do is watch the news. Like, there's high risk of insurance all over the world. Mm-hmm. It doesn't have to be just on the coastline or just on this amazing island, that sort of thing. So I understand that, and so there are going to be some instances maybe where things still jump a little bit.
Right.
But your general sense is maybe it's not going to be dramatic like last year.
Right. There was no we didn't get another
you
massive.
Get like a gut punch on that.
Yeah, the reinsurance companies by and large.
Okay, so we go through this cycle from a soft market to a hard market, and then it keeps cycling around. You said, right, 5 times in 50 years, that sort of thing. So where are we in the cycle? And given the fact that we got hit so hard last year, and this year you're at least kind of sensing, as a general rule, like it doesn't look like it'll be fairly level. At some point, does it tip down? Like at some point, do we feel like, oh, actually that big hard hit that we're paying for last year and this year might actually cycle down when more carriers get an appetite to come back into the market?
Yeah, I think in what we do is you just got to watch, the profitability is coming back. We're seeing there's a whole group of reinsurance companies that we watch. And we're seeing profitable, third quarters. You know what I mean? Year over year, third quarters from last year. So that's good news for us, even though we haven't felt it in the renewal that we're receiving yet on the island. But it's definitely going to happen. It's not just because I'm an optimist.
Yes.
If you historically look at each of these hard markets, they generally correct themselves. It's this capacity limitation, underwriting rigor. Everybody becomes more profitable, more investment comes into the insurance market, carriers want to grow again.
Yeah.
And then
that's the cycle of what they do. Basically, they're taking on risk with the intention of having some kind of return on it, right? And so in the necessary evil world, and we're paying these high premiums, you kind of have a hard time getting your mind and heart around the concept that you really want these insurance companies to have a high profit, right? It's it's sort of counterintuitive, but at the end of the day, you do, because that's the nature of the business that they're in, right?
And if a company rewards you for having those risk management devices, chances are they're the kind of company doing that rigorous underwriting that's going to be more profitable, they're going to be more stable.
Yeah.
So
sure.
All that, but when's it going to happen is the key question. I'm even going to back myself into this, but we generally in all those 5 hard markets that we've talked about, the longest has taken 3 years to correct.
Okay.
So that's interesting. When did we really start feeling this pain? It was probably the beginning of 2022.
Yeah.
And it's going to be probably, it's going to be the end of 24, 25 before it. And granted, we still need to make sure, hope and pray that we don't have this awful, claims history going on.
Well, that was a nice thing, right? I think we're also grateful that we really had a much less active storm season in the fall, right? And for a ton of reasons, but certainly that helps.
Right, absolutely, claims activity. And then another question, which I think is interesting that I get a lot, and you and I've talked about too, is will the rates ever go back to where they were? That's interesting. When I think about insurance too, I don't just think about home insurance. I think about our autos and all the stuff we're insuring. And if you think about your bumper on your car, 3-4 years ago, the bumper on your car didn't have all the sensors in it, or potentially didn't. So it was $1,000 to fix it.
Right.
Your bumper now can make you a cup of coffee.
Right. Right.
To replace
it's super complicated.
There's so much
expensive
technology, right? So now it's $3,500 to replace that bumper. So the cost of the insurance insurance may go back, right? That we may see a point where the cost
per dollar
of $100 of insurance.
But what we're insuring is a more valuable asset.
Right.
And that happened in real estate too.
Yeah, and so the same thing with the cost to build your home, right? So,
Right.
we're insuring our homes, pre-COVID to today, maybe 40-50% more.
Yeah.
Because of the cost to rebuild.
And that's part of your counseling too, is to sit down and say, listen, and I'm sure that's an annual review thing, like, the cost of construction has gone up, the cost of materials went up dramatically over the last couple of years. So that's part and parcel of that advice too. So while you might get the cost per dollar might come down, the component of inflation and where real estate values have gone up and material values have gone up, you're going to have that consideration of, hey, let's just make sure you're insured properly and responsibly. Right?
Yeah. Another kind of cool thing that's happening in the insurance industry, and everybody's talking about AI, right? We're talking about technology.
Oh, yeah.
There's sort of this whole movement of the quote-unquote insurtech, right? Like the increased amount of technology. We're sort of, it's sort of an old conservative industry, right?
Yeah,
highly regulated. There's some disruptors out there. There's companies that are doing a lot more with technology to predict what will happen, predict behavior, and then usage-based models, right?
Sure.
Which is more of an automobile thing, but those kinds of things, I think that's encouraging. I think for all of us as consumers, right?
Yeah, of course.
Because we can be a better risk, right? We can be making decisions that improve the insurability of our homes and our autos and our lifestyle.
Well, it seems like insurance companies kind of pay attention to that anyway. Like people. My sense is that people don't realize that your insurability, your track record of an insured is following you. Just like there's a history on the house that you're buying is present too. All that data is being thrown into the algorithm. To me, it sounds like it's as I said, it's a more transparent and maybe a complicated world. It's probably always been complicated.
Yeah.
But I think that now there's transparency on the complication and the complexity of it. And then having the opportunity for people to play a part in it, in terms of your insurance score or your ability to put devices into the house or determining what your level of risk is or whether or not you want certain coverages or not. That unpacking of that whole process to me feels new, because I think before it was sort of like, oh, this is the package, you buy it, here it is, and you can shop down the street, but it's probably going to be about the same. So I think as people look forward to their renewals, one last question that I have for you is, when is the right time to start calling around or asking questions, even if it's not calling around, like it's a renewal with Goosehead? Like, when's the right time to start having those conversations? Is it a week before, a month before, 90 days before? Like, what are you seeing?
Yes, that's a great question, and I hope it's not a week before.
Yeah, right, because that's tough for you, right?
Well, I mean, we got work to do usually, and I want to have a conversation, and I think it would be great for everyone to have the conversation.
But it seemed like before renewals were sort of automatic. Like, of course they're going to renew, and it went up a few percentage points, and you're good to go, and we'll stamp it, and we'll move it on, right?
So by law, an insurance company has to inform you 60 days ahead of your renewal that you're not going to receive a renewal.
Okay.
I would 100%.
But somebody's got to be paying attention to their mail, their email, so in any event, I think that people need to, especially in this new year, is be mindful of, get over the jarring effect of last year, maybe be prepared for things to hopefully level out a little bit. Consider still shopping around, asking smart questions, evaluating what they can do to maybe improve their insurance score, the insurability, and maybe hope for the best as we ride through 2024.
Yeah, I think though, and to your point about like when's the best time, most insurance companies will give you a rate for a new policy that you can bind within 30 days.
Okay.
So a lot of people like that 30-day window because you've got a rate that you can depend on, and it's available. But to me, if you're having some thoughts or you're worried or concerned, just call, right? Like
call anytime.
Get on the phone and just start talking.
But probably 90 days before, you need to be having that conversation.
Yeah, I mean, I think somewhere in that 60-30-day window is a good time to be making sure we're gathering all the information and then get that done.
Meg, you're a rock star. Really appreciate your time and your insights, etc. And hope this has been helpful for you guys just to be thinking about one of those two eyes. We're talking about how interest rates are coming down, so that's promising news. Maybe insurance rates are going to level off. So it looks like it might be a promising year in 2024.
I think it's going to be a great year. I love being here, and delighted to help anyone who needs us.
Thanks. Thank you so much.